Hi, Virginia and Sean. How are you? Sorry, I'm just trying to get this to allow me to share my screen. So
Still got you on now.
it's like not highlighted. Microphone's on. Camera's on. It doesn't allow me to share my screen. It's so weird. System preferences, security and privacy. Okay. Location. It's not the camera because the camera's on. The microphone.
Something where you have to update your settings. Is that what it was back there? It's a detail.
Oh. Hi, everybody. Can everybody hear me? For some reason, it is decided to not let me share my screen today. It is giving me a Zoom is blocking off. Can't share my Zoom screen. So I'm just trying to figure out how to get around this. There's the camera. I mean, it's got everything blocked.
Do you want to try it with my computer?
Yeah, hang on. I'm gonna switch computers real quick and try Elizabeth's computer.
Do you?
I have it. I'm gonna log off. Well, maybe it's gonna kick you off. Hang on.
Do you have to get into? Can you just go straight to the?
Yeah, I can go straight to the-
Okay, cool. Goes here.
Sorry.
No, that's okay. Is it not happening? We're trying.
We're trying.
Okay.
It's not letting me share my screen.
Well, I used to watch and seem to mess up the link, but I saw you had it one point.
Yeah.
Did you know that?
Yeah, I can see
Like 2
you.
minutes, you could?
Yeah, like everything works except on his laptop, except he can't share the screen because he finished by my laptop. I mean, my desktop, because I used it and it left me. I mean, the last time I did it, it left me.
Yeah. Okay, I'm gonna send a message to everyone.
And just let me know. Having some screen sharing issues.
Yeah, screen sharing. I can't talk. I just wanna make sure I didn't.
I missed you the beginning again. Start cursing and stuff. That would be awesome.
Yes. Is that your preferred gum?
I prefer gums, whatever, is like minty and cheapest.
Do you get it all?
It's in public line and then in public. When I go to public all the time, it's right now.
It's, that's the same.
Yeah.
That's the same.
Or
Two.
Hi again.
Is that on both?
Yeah, now we have to take off.
Let's see here. Almost there. Sorry. Can everybody see my screen now? Okay, I just gotta turn off my audio.
We're seeing it.
I don't know how to get to it. Okay, sorry that my computer decided, so I'm on Elizabeth's computer now. So anyway, happy it's Friday. All right, we ready to roll into this? Let's see here. So median price. So look at the last couple months. Right, so we hit 425 in May. So look at the last couple months of where we're at. So 425, 420, 399. So where does everybody think we're going right now? And again, like you got to keep in mind, so I was doing some math earlier. So from 360 in January, we went to 425 in May. That's 18% in 5 months. So we went up 18% in 5 months. So the last couple months, we've gone from 425, 420, 399. Now, we probably were a little overheated, right? And we probably overshot in this range here because there's no way we should be going up 18% in a 5-month window, right? So this is a little bit of a comeback to reality. Now, going forward, it's going to be very interesting to see what happens because these numbers are so high that are we going to be able to match these next spring, right? Are we going to hit 425 and 420 next May or June? I don't know. Like, I mean, we're at 399 now, and what's the trend? I mean, the trend traditionally, if you have any normal year, so the last normal, if you want to call it that year, was 2019, right? We peak in the summer, and what do we do the rest of the year? We kind of drift down, right? So I know we've talked about this before. The first 6 months are where you see most of your appreciation, and then the last 6 months are kind of, they can be downward. You know, I know that sounds weird. Your net is a positive. So, you know, December of 2019, we're at 275. January, we're at 266. So we went higher, but you have a massive price growth and then it kind of falls off for the rest of the year. So again, you kind of have to ignore 2020 and 2021, but is this part of what we're experiencing right now? We probably overshot in here and we're getting our traditional lower median sales price as we go towards the end of the year. Now, and I haven't been great at predicting stuff the last couple of years, but I think we are at a point that watch what happens this December coming up. So December of last year, we were at 385,000, right? Where does everybody think we're going to be December this year? Do you think we're above this number or below this number? I think there's a chance we're below this number, right? With interest rates where they're at, with inventory coming up, houses becoming negotiable, I think there's a chance we're below this 385 number. You know, we're at 399 right now, right? So 385, when you go forward in time, you usually go down the second half of the year. If we go below 385 for December, what's the media going to say? The media is going to say house prices are coming down. Right? Right now we're up 14.1% year over year, but December of this year, because you can see that massive run up we had, you know, we had a pretty significant run up from September to December, which is not normal, right? We're traditionally falling off towards the end of the year. So we had a pretty massive price growth. So I think there's a chance when January rolls around next year, they're going to say, hey, house prices are actually down year over year. Right? And it's partially because we had this massive run up twice, really, kind of towards the end of last year. We had 1 month off and then right back up. So, you know, if we're predicting what's happening, we traditionally peak out and come back down a little bit. Where are we coming to? Maybe in this price point level here. You know, I can see that happening. So, I mean, we could be dealing with the media saying house prices can come down by January of next year.
Anton,
Yes?
Do you sense this is happening at all price points? A combination of all the price points, or do you think
mean,
it's a
you know,
chunk
you
lower
have-
driving it?
You have a lot of inventory from some builders that came on
Yeah.
that, were building ahead. So I think you do have a little bit more pricing pressures in some areas. I think if you go look at specific homes that sold in this area in here, like time frame, I'm not convinced they get that same price today. Right? I mean, think about contracts for March and April. I'm not convinced that all those houses that closed in here would sell for the same number. Now, also keep in mind, that's not that out of the ordinary from, if you go back to 19, we went from 289.9, so let's call it 290, down to 270. So the median price went down $20,000 June 19 to basically November of 19. Does that mean every house went down $20,000? Not necessarily, right? Keep in mind, this is median price. So it's just harder to push appreciation the second half of the year compared to the first half. And especially when you had 18% growth in the first 5 months. So, just watch this price as we go further in the year. Do we sink below these last year's numbers? And I can guarantee you next spring, call it May of 2023, are we going to meet 425? I don't know. Like, I'm not convinced we will. So I think we run some risk the first 6 months of next year of being in this year over year, because that's what the media drives on. It's year over year comparisons, right? So they always are going to look a year ago and where were we? Well, I think it's going to be hard comparisons December of this year. And then once you get to spring of next year, I think this 425 and 420 are going to be hard to meet. So I think as you go forward in time, the first 6 to 8 months of next year could be tough from a media perspective on house prices. Now, as if we settle down in this price range here going forward past that 6 months, we'll eventually start to turn more favorable on back to a normal 4 to 5% appreciation. So just, and again, we're probably going to be, if you look at July, where were we last August? So last August, we were at 358. Well, we're certainly going to be above 358 this August, right? So the next few months, it's fine. It's December that I'm concerned about that year over year comparison. And I mean, typically, what happens in Charleston is pretty much reflected in what's happening in the US. So, the trend is going to look similar. So I'd say watch out for the media the first 6 to 8 months of next year on house prices. And again, you prepare mentally your buyers and sellers and yourself. It's like, what's that conversation going to be like with buyers and sellers if this number starts to turn negative? And you're going to have, everybody's going to have their own opinion, and you're going to have different conversations, but those conversations are going to change. It's not going to be up 14.1%. Price per square foot. So if you look at median price per square foot, it's started to level off. It's up 15%, but it's definitely huge run up, but it's starting to level off. So we'll see kind of where that goes. I mean, I know people don't use this chart as much as just the sales price. So median price, I mean, we're still at 100%. At some point, we're going to start to dip below this. You remember, median is the 100%. Half the houses are selling for 100 or over. But if you look at the average, so here's the average. We've gone from 101.2, and remember, May of 2022, one of those contracts. Those are probably like the March, maybe April contracts, right? So that was probably the peak. That was our low inventory. It's probably our peak contract writing period. But you can see this is what happened last summer too, right? It goes up and it comes back down. And then if you go back to 2019 as our normal year, we go up. And I mean, we started the year at 95.6, we went up to 96.6, and then we went back down. So, seeing these is not that out of the ordinary. We're just at a much higher level than we were. Now, July of 2022, we're at 99.6. July of 2021, we were at 100.5. So you can see we've dropped, almost a full percentage point on the average original price, which again, it's hard to tell because the median's 100. At some point, this is going to fall below. And, the data's in the background there. I can't tell you when, but watch this. It's going to fall below 100 at some point. And that what's telling me is the average. And I mean, we stayed above 100 right in here. So probably once it gets below here, it's probably going to go below 100 on the median. Days on market. I mean, we're still super low, 4 days on market, but keep in mind, these are July closings. So these contracts are still from a couple months ago. I mean, I think everybody would in agreement, the contracts coming in today are not like what they were even 60 or 90 days ago, as far as how quick they're coming in, how strong the offer is compared to list price, so everybody's becoming negotiable again. So, this will eventually start to go up. I mean, we're still hyper low, but if you look at the average, we're sitting about 14. So, I mean, still at our low on the average, but you're also, I think you can see houses going under contract today. If you were to look at the averages, because these are closed sales, remember? So the average days on market the house is going under contract today are certainly more than 14, right? I think if you look at the average, it's more than 14. Months of supply. So we're at 1.5 months of supply. So compared to, if we go to last July, we're at 1.2. So not dramatically different. I mean, 25% higher, but 1.2 to 1.5 still will tell you we're in a seller's market, but the trend is certainly higher. And also keep in mind, this is based off of, contracts written a couple months ago, and, 2 or 3 months ago. And some of these were new construction written 6 or 8 months ago that are finally closing. But as we close them out, this months of supply will continue to go up. I mean, we're, like this path was down from here, this point forward, I think we're kind of going up, and again, my prediction is we're going to land somewhere where we were prior to COVID. We're going to get back up to this level, which is a normal, healthy market. Homes for sale. So on the homes for sale, and I still don't exactly understand where Market Monitor is pulling these numbers, because it does not look like my calendar numbers. Because I mean, it's showing only a 13% increase year over year. Well, if I look at, today being August 5th, we have 2,651 for sale as of this morning. And last August 5th, we had 1,694, I believe. So we're 47% higher than an actual number taken with active listings. I have no idea, because I mean, remember, we got down to 928 in March, right? What does Market Monitor show? 1449? I have no idea where they got this number from. Because I mean, we take this number every morning, and I mean, I have 928 in my calendar. I'm sure that was an active count that day. So take the trend.
It's not because it has the contingents in there?
I don't think that's it, because we have
It doesn't
way more
reconcile?
active and contingent than 2,700. I
Yeah.
have no idea how they're pulling this number, but just look at the trend. But the absolute number in March is
Right.
928, not 1449. So it's a little confusing how they're getting these numbers. But the trend is higher, and I mean, we're 47. So sitting down on my computer a year ago, compared to today, we have 47% more to choose from for buyers today. I mean, that's a pretty significant difference. Now, we're at 2,650. We're still less than half of what we need. We need to get back up to this level here. So we're on that upward trend, and I don't think that's gonna. We might have a seasonal slowdown, because if you look back in time, you have that same trend over the season. January's the low, it goes up to, May, June, and then it comes back down, right? So if we go further back in time, you're gonna see, like, here's 17, right? We have the upward trend and then winter, and then upward trend and winter, and then upward trend in the winter. So we're going to return to that seasonality. A lot of this was just the market shift, right? And now we're shifting back the other way. Closed sales. So closed sales, we are off 21.4%. And I mean, this is not just Charleston, this is nationwide. If you look at specific cities, everybody's off in this range. So 21.4% lower. So we closed 1679 this July. Last July, we closed 2136, right? But let's go prior to COVID, look at the charts prior to COVID, and we were peaking out in the peak month just about 2,000, right? And I mean, we're kind of going back to that peak. And then the trough, we're down, 1,100, 1,000, 950, 1,100. So are we going back to this look? Probably, right? We're going to go back to what the normal market was prior to 2020. And I also wanted to point out 1,679 closings. So let's go back in time. And I think I even have to go back further. So 1,679 in July. Remember we said last July was 2,136. July before was 2,435. That was, keep in mind that was all from the COVID shutdown, everybody closing once things opened back up. So that was kind of, unusually high. July of 1824. July of 1698, so still higher. 1693, still higher. And then 1666. So if you look at 16, 17, 18, and even, to some degree 19, we are already back to roughly that closing level for July of these 4 years in here, which that was a pretty steady pattern. If you look at the graph, I mean, we had growth in here, right? And then for 4 years, we looked very similar. So we're going right back to where we were in these years. And again, if you do a rolling 12 months of closed sales, so we were sitting flat those same years we're looking at. Look at 17, 18, 19, and then, the start of 20. Those 18,000 sales, that represents about 1,500 a month. So we had huge growth, from here to here, and then we were very flat for about 4 years, about 1,500. So we got up to, over 2,000 sales a month on average. And now look where we're going back to. Where are we going to end up? I think we're going to end up at somewhere in here, right? So 1,500 homes sales a month. So we're off, if we look at the monthly, so off 21.4%. And that's going to be the trend for a little while. Now, again, remember year over year, we got to get to, probably, in that late spring of next year before we can start to think that this might flatten out and turn positive. I think these numbers are going to be negative for a little while on closed sales. New listings, it's very interesting because if you look back, pretty much all the way back to 16, you really barely even notice any difference with COVID, right? Since 2020, right? This looked like that. This doesn't look that different. It's all about that same level. So it's interesting to know our listings are off 16.6% from a year ago. So if you look at, we're at 2178. Last July, we did 2,610 new listings. So, we've dropped significantly since last July on the number of newly listed properties. Do I expect any change on here? I mean, if we're off 16.6, last month we were 2569, which was actually higher than June. So July was a big drop off. And, if I had all the explanations for that, I think part of it is higher interest rates. If you're a local owner wanting to move and sell your house, well, when rates jumped to 5.5%, 6%, there was less motivation to list your house, sell your house, and move to another one. So I think a lot of this isn't necessarily like the job reloads or divorce, death, marriage, whatever the defining reason. I think a lot of that is just kind of the move up. People are not listing because they realize they have a good house payment and they're not willing to give up their interest rate. So I think that's a big part of this drop off. Pending sales. So we're off 22% on pending sales. Well, what does pending sales turn into? It turns into closed sales, right? So if we're off 22% in pending sales, you're probably going to be off the same 21.4 in closed sales. So that's probably going forward. It's still going to be that low. And you can see this is the first year. Look at 2020 and 2021. Look at the number of pending sales. This peak is starting to look like these, right? So we're returning to this 2018-19 period of time. And you know, we're off 22% from a year ago. So last July, we had 2,044 under contract, and this July we're only at 1,595. So that's a pretty significant drop from last year, but it looks, you know, it's even less than 19, right? 1,736, but very similar, it's the same number actually as 18. So again, we're returning to this level. It just feels so much different than these 2 years. Dollar volume. So here's the dollar volume. So we're off 10% on dollar volume. So we finally, you know, the price increases were outweighing the lower number of sales, but we finally have flipped over and our volume is actually going down. So last July we did a little over $1 billion, 1.026, and we're about 100 million less. So, you know, we're starting to flip over that calendar. And I mean, you know, your comparisons are tough, you know, when you have this high, because I mean, this was a very high volume period of time last year. The comparisons are going to be tough on volume year over year. And you can see the jump from, you know, where we were back here. And even if you do a rolling 12 months, we look at that run up in volume, and now we're kind of sideways and maybe coming down a little bit, not necessarily due to house prices alone, but it just the number of transactions being 1,500 versus 2,000, you can't keep up that type of volume. So, you know, I'm expecting that if you look at the rolling 12 months, this volume is going to continue to come down. I don't think it's coming down to this level because the prices are not going to return to what they were back here, but we're also going to find a new level that's not this high and not this low. And then, you know, shows pending. So, you know, we were 13 showings as a median to pending in February. We got down to 8, we're back up to 9. So we're kind of in that 8, 9. So not quite half, but a lot less people going through the house, and especially in a short period of time. And you can feel that difference from where we were in the spring. And then shows per listing, you know, we're still about 6. We peaked out at almost 11, so almost double, you know, the number of showings per listing per month. But if you look at where we're back here, I mean, in the spring market, we would peak out at under 6, and we're still over 6 right now. So, you know, for all of us that were in the business here, we're still busier now with activity, you know, with showings than we were back in here. It just feels so much different than it did here. So, you know, when you look at the market as a whole, you know, you can see the year over year comparisons, especially the next 12 months, are going to be tough because, you know, it's going to be hard to top, you know, this spring on activity. And you know, the year over year comparisons are going to happen next year. So, I mean, we have 2,651 right now. By next spring, I mean, in theory, we could have 4,000 listings. So when you go from 928 on March 15th, I'm just looking at the calendar over here. We had 928 on March 15th. So if we go up to 3,700 listings, next spring, they say, oh, the inventory's increased by 4-fold from a year ago, right? But that's still below where we were, you know, if we look at homes for sale, that's still below where we were pre-COVID. And again, like if I go all the way back in time, so here's our listing count. So, and they have 2,700 on here. Pre-recession, the lowest we ever got was 4,000. So we're still below the crazy market pre-recession with 15, 17 years of population growth. So all of that combined is making, you know, you realize like we're still in a very, you know, opportunity for a very healthy market. It's just that return to the normal levels is going to be painful for some people right now. You know, your sellers, I mean, comps are going to matter again, right? It's like, okay, comps are going to matter. You know, showings are important. The way your house is staged is important. appraisals are coming back in, right? Home inspections, everything's going to return to what is a balanced market of negotiations and repairs and inspections and appraisals. It's all going to matter. I've had a couple of appraisers call me lately, and they're readjusting their time so that they can provide a time value. So during the craziest period of time, let me zoom in a little bit. So I know several appraisers in here that were adjusting comps by 1.5% a month, right? So 1.5% a month, a house closed 3 months ago, they're plussing up that value by 4.5%, which is 18% of the year, which is what we were experiencing on median price growth. Well, now they're starting to either lessen that or remove it completely from a time value on those comps. So, appraisers, that was not a very envious job the last couple of years, I'm sure. So they're starting to back off any sort of, appreciation adjustment on the house. So that's something to keep in mind as you're going forward, is that, a house that closed, for most of the time, it's like we used to take 6 months of the last home sales, right? Let's look at the past 6 months, what's happened. And during this period of time, 6 months felt like an old comp, right? Because the prices had changed so much. But now we're going back to, where the past 6 months at some point will matter. And you have to have those comps justified. And just like in here, a lot of times when you were on the market, just because there was nothing for sale, if you were the best house, it didn't matter what the comp showed. But now you really need to focus on the recent sales and what's active, right? For a while there, if you were the only one active, that's all that mattered. Now you have some competition, right? If you look at your listings that you have or the ones that you're getting, I recommend you look at what other active ones, yes, use the sold comps, but also look at what your active competition is. So you have to do the same thing in reverse. Is like, am I the best one out there compared to my competitors? And things are starting to shift back towards the buyers. And this drop in rates the last week and a half, I mean, reach out to your buyers. They're not paying attention like you might be. They might not realize that they can get loans in the mid-4s, right? That they might just assume, they read the national average a month and a half ago and it was 5.78%, and they raised rates 3/4. The Fed raised rates 3/4. They might assume it's in the 6s, right? So don't, and if they got pre-approved 2 months ago, 3 months ago, go back and find out what the current rate is, because you might be surprised by what's bouncing around in their head and what reality is. So it doesn't hurt to and also from those buyers that were looking with you at the beginning of the year or last year, it's like they have 3 times as many choices as they did 5 months ago. So you have more choices, you have less competition, and compared to what they're thinking on interest rate, it might actually be lower than what they're thinking. And I don't know if other people on this call, I've had a lot of conversations about contingent upon home sales being accepted. I have one under contract with a buyer that's contingent upon them selling their house, and the only way I was going to find that out was ask. And we didn't even, honestly, we just submitted the offer. We didn't even ask. We submitted the offer because we felt like there was an opportunity we could get them to accept, especially if it was on paper. So, it doesn't hesitate to basically push that home sale contingency, because we are returning to a normal market where the seller might consider it, because that still might be the best option. So, things have changed enough where, you have to be paying attention to what it used to be and get back to that mode. From an aspect of, I see a lot of quick price changes right now. People put their house on Thursday, and when they don't sell it by Sunday, they drop the price. And again, everybody's used to selling in 3 or 4 days. Well, that's not the way it usually works, right? Let's go back again. Days on market. So let's look at the average days on market. So 2019, where were we? 50 or 60 days on average, right? Not 14. So where are we going? My guess is we're going to go right back to here, right? If you look at the long term, in fact, let's go all the way back, right? In this window of time that we were at 16, 17, 18, 19, we were in that 50 to 60 range. And even prior to the recession, we were at 50 to 60 range, right? Here's all the recession. We were, 4 to 6 months to sell a house. But this is normal. So, again, like I have one listing that I've had on the market, I think it was 63 days, right? And we made one price change during those 63 days, and we went through 32 showings, and we finally got a contract yesterday, right? But that's very normal, right? That's kind of what happens. And we were able to basically, after that period of time, we got pretty close to full price, and we got our cash offer, and very clean contract. And your sellers, I know they're motivated and they don't understand why their house doesn't sell on the weekend. They need to exhibit some patience right now and watch the feedback. Yeah, if you're not getting any showings at all, you've got some challenges, but don't be surprised. You're going to go through more showings. It's going to take longer to sell, but the sellers have to show some level of patience unless there's a specific circumstance that they really need to sell it on a weekend. That they have to exhibit some level of patience that this was not normal, right? It's like we're quickly, I have a feeling once the next rounds of closings start to happen, you're going to watch this number start to go up pretty quickly. And again, for those of us that were in the real estate market back in, this felt great. There was nothing wrong with this. This felt like a normal market. So just be prepared that we're basically heading back to right in here. So it might take you 30 to 60 days to sell a house. And that's okay. That's part of the market. And, you can't always sell your house the first weekend. And think about it. It's like a lot of times your better buyers are coming from out of town. Are the buyers from out of town, were they back here just dropping everything they were doing, getting on the first flight out of town, coming to check out a house? That's not what was happening back here. But they're like, oh, we're going down to Charleston, middle of September. So put this one on our list for when we get there, right? And not that those were always sitting around that length of time, but the out of town people are scheduling in advance, and they're not buying a house in 2 days after it comes on the market typically. So we are going to go back to here, and essentially with the available supply, when you look at the homes for sale, as we return to this level that we were at for years, it gives that buyer more options to consider. I have my top 3 choices, right? I mean, how many times have you said that in the past 2 years, right? It's like, it's basically they have their one choice that they're going to go after, and there's a good chance they're not going to get it. We'll go back to where it's like, well, here's my top 2 or 3 that I like, and here are the reasons why I like it. And buyers are definitely becoming more selective on what they want, right? Now that they have choices, they can actually be picky, right? So we are in that shift mode, and I think we're going to be there the rest of the year, that buyers, sellers, listing agents, buyers agents, their appraisers, inspectors, everybody's got to get used to where we were back here. And it feels like it feels different than the last 2 years, but it's probably a fairly normal market right now. We just don't realize it. Anybody have any input they'd like to add? Any questions that you have out there?
One of the things, can you hear me?
Yep.
Okay. Great information. Thank you. And I agree totally with you. 16 to 19, 2000. I think we're going to retreat back to those numbers. And I'm wondering now if we have over the last 30 to 45 days begun to take, as buyer side, begun to take and win more concessions, like you said. So back in the so going back to your percent of original price, on your negotiations, right? Your discount. do you feel that we should start as buyer side? We should start pushing for that 97, 98% discount now because we are turning into that market. And if not at the 98%, how deep do you think we should go?
Yeah, and I think where we're at is that you gotta gauge how long has the house been on the market? Is it the first weekend? Is it 30 days in? Have they done price changes? Have they not? Right, so I think every circumstance will be individualized, and obviously if you feel like, oh, wow, we've got competition, you need to be strong. But if it's 30, 45 days into the listing,
Right.
you can be more negotiable because the seller really doesn't have another option.
Do you see the discount retreating along with the days on market?
Yep. I mean, I think what we're gonna see is this is gonna go right back down. I think if you look at every one of these charts,
Yep.
look at this window of time, like 15, 16, 17, 18, 19, and that's where we're gonna end up. And keep in mind, like, look at a quote unquote normal year. Look at the seasonality, even within the percent of your original price, right? In January, you're negotiating almost January of 16, you know, the average negotiation was 5%. Right? By June, what was it? 2%.
97.
That's a pretty significant difference. So here's a conversation with your buyers moving forward. When do you want to be a buyer of a house? You want to be the buyer of the house when there's the highest supply, lowest demand, which will give you the most negotiating ability. Well, when is that? That's in the winter, right? So, and I know as a buyer, it's painful to think, oh, I'm going to have to be like worrying about inspections and writing contracts and possibly moving like in Thanksgiving, Christmas, New Year, like beginning of the year. Well, you're going to get the biggest negotiating ability in that window, right? So we're you know, beginning of August, we're heading towards that time with higher inventory, rates that have now come back down a little bit, you know, with less demand. It's like it's so much better of a time to be a buyer right now than it was 6 months ago. So we need to be having conversations with our buyers of what has changed, because you probably have some buyers that have been lingering around that got frustrated and gave up, right? They're like, I'm never going to buy a house. This is too hard. You know, this is never going to happen. You have to re-engage those buyers and explain to them these things, that it's like you're going to that better part of the year to be a buyer, not only on a seasonal basis, but also on the market basis, right? Our inventory is going up. Our demand is going from, you know, 2,000 sales a month to 1,500. So you've got everything going in your favor as a buyer. Get out there and look. And if the right house is up and the right interest rate and the right payment, then you have that opportunity, maybe without 10 people lined up with you. So it's that conversation. And again, same thing with your sellers on the opposite side, is that we are going back to these levels. So you might have to negotiate. You might not get full price, right? You need to help drive the traffic. You might have to have your house perfectly staged, right? You might have to be priced under the last sale, right? You know, and again, you know, when you look at some of these sales that have happened, obviously the seller only wants to select the highest one that was the best comp by far. And I bet you if you find that one, you know when that contract was written? Probably March or April of this year, right? When we had 900 per sale, you could, you know, the price was as high as, you know, the bidder would take it, right? Now that there's choices, the buyers at the same time are becoming more selective and a little bit more kind of reserved. And when we go back, you know, and I'm telling you this is going to happen, when this number here, this is me, it's going to go negative at some point, right? I truly believe this is going to be a negative because this was unsustainable growth, right? So at some point as we go forward, you're going to look year over year, and it's just 1 month, you're going to look year over year, it's going to flip to a negative number. And the dynamics of the mindset of buyers and sellers are going to change. The buyers might be like, whoa, 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 if house prices are going down, I might not want to buy right now, right? So again, this is going to be a national number, not just Charleston, right? And so you have to be prepared at the and in my opinion, it's like January of next year, I would bet a little bit of money that there's going to be some negative sales, median sales price. And it's going to create this situation where there's going to be a hesitation, quite possibly on both sides. And we need to push through it and explain to them, it's not necessarily, we probably overshot, right? That's the best way to look at it, is the market went up too far, too fast, in too short of a period of time. And we're kind of adjusting back to where we're going to get back to where, you see, if you draw from here, again, here's the recession, right? If you draw a straight line and you kind of go up through all these prices, you know, we have, you know, the market as a whole has made housing a lot less affordable, right? It's all about affordability. And part of this will depend on what happens with rentals. If rentals keep going up on price, it will help kind of keep the house prices high, because you're the tenant or a homeowner, you're paying payment one way or another. But if you draw a straight line, even with a little bit of slope, we overshot it in the spring, right? So I truly feel by January of next year, we're going to start to see negative numbers for possibly 6 months. And then it will stabilize. And you're not going to see huge negative numbers, but I think a negative number is going to be a shock to the system that we haven't seen for probably since in here, right? And it's not going to be a large negative, but I do believe we are going to flip by January, because I don't think we're going to be at 385 in December of this year, right? I mean, we only have, you know, what, 14,000 median price room from July to December. Traditionally, on the seasonal basis, we drop more than that. So I do feel like and then these massive numbers that we had in May and June, I just don't know if we're going to be able to achieve those. So that's why I'm saying the first 6 months of next year are going to be tough for the year-over-year comparisons on price and
So are
sales.
you considering it going down to 350?
No, I can't see it going down to 350. But this one data point in December, that's 385. This is the one that I think that's going to be the first month, you know, and I'll do this every month. I could be wrong. I have been in the past. So I think when you get to December of this year, I think 385 is going to be a hard number to beat. I really do. I mean, if we're at 399 right now, I think 385 in December is going to be the month where this flips to a negative number. And then I think, I think 350, I don't see happening. 425 and 420, when we get to May or June of next year, those are probably too hard numbers to beat, right? Because the media they always look at the same month last year compared to this month this year, right? So I think we have a few data points in here that this is going to flip to a negative number. And remember, a couple months ago, this was 22%, right?
Right.
So now we're down to 14. We're going down, and I think we're going to flip over in December. And it won't be because remember, if this line kind of goes into here, by the time we hit July of next year, I think we're going to be in better shape to go flip this back to a positive, right? This is only a period of time that we're going to have very tough comparisons because of the massive growth in here. And it's the same way with, you know, the closed sales. I mean, there's no way we caught up with us already, right? There's no way we could keep up with these closed sales. It was so much higher than historical, and it finally caught up with us, right? And we're off 21.4% on the closed sales. The same thing I think is going to happen on price, is that we're going to flip over where we just can't sustain that type of growth. But I think it's going to be a limited, hopefully 6-month period of time. And then we start to return to, oh, look, you know, 3.8%, 4.7%, you know, the normal historical growth rate. And I felt like, you know, they went up too fast on the mortgage rates, and it doesn't shock me to see us kind of settling down, and hopefully we don't see 6%. But think about what happened when you go from 3% to 6%. We basically eliminated probably 95% of any refinances gone, right? So those are gone. And how do banks make money? They make money loaning money, right? So their refinance market went to almost zero. At the same time, you have the purchase mortgage market. If we're closing 21.4% less on a nationwide basis, their purchase money is off by 21%. So you have zero refinances and this off by 21%. Those rates went so high that to be competitive, right? They're not going to go out of business. How are they going to be competitive? Charging a lower rate, right, to capture business. And even though, I mean, it's so, opposite of what you think would happen, the Fed went up 3/4 of a point. What did mortgage rates do? They went down 3/4 of a point, right? So, but I think it's partially because of the forecast of where things are headed. Now, they came up with a jobs report today and it was a huge number for new jobs. So, that's kind of saying, hey, we still have very, very low unemployment, which is giving us, heartache about maybe more inflation. Fortunately, gas prices are coming down, and we'll see if they stay down. But, that's a big driving factor behind inflation, is that everything we touch is related to fuel because everything is transported somewhere. So, we just have to watch, there's a lot of things happening in the world more than just the economic world. And we just have to watch everything. But that's kind of my, this doesn't surprise me. And then, remember, once we hit next July, this might be, we go to July 2023, this might be a flat or positive number, right? So we have to get through this year-over-year transition, which is going to provide a lot of negative numbers that have already started. But then at that point, once we reach that level, it's going to be a normal growth rate, right? We will return to a normal growth rate at some point. We just have to get through, really kind of the next 12 months of, potential negative articles on real estate, because I think the price article will start raising its head in January. And again, our numbers, they reflect what's happening in the US as a whole. I mean, Charleston's in a better place, but I was reading through Phoenix numbers and some other cities, and it's like, they're about where we're at. They're off 21% in sales, and, it looks similar pattern to our numbers. And we just have to get through the next 12 months of this transition back to these years, which we're fine. There was nothing wrong about being a real estate agent in these years, and a buyer and a seller. And we just have to have this information and knowledge to convey to our clients and let them know kind of what's happening, because some of these articles, when they come out next year and if prices are negative, you're going to get those questions, and you just have to be prepared, to be able to answer those. So, any other questions, input, thoughts?
So how would you encourage a buyer to,
So right now, here's the thing, is that I feel like a lot of the main reason why we might see a negative number on prices is because there was a window of time where buyers were just buying something because it was available, right? Comps didn't matter. People weren't doing inspections, appraisals, nothing mattered, right? And they're not a buyer in that period of time, right? They're in a buyer where there's higher choices of inventory, there's less demand, rates are actually lower than they were a month or two ago, and you're going in that seasonality. So the next 6 months is everything's pointing the right direction for buyers, right? So if you're a buyer, it doesn't mean, hey, and a lot of the buyers I see right now, they don't have to buy a house this week, right? I think in the spring, we saw a lot of people that were going to be homeless if they didn't buy something. Now you have buyers that, I have to sell my house, or I have a place to live, but I want to buy another place, or I'm a tenant. So they don't have to buy a house today, but go out there and find, look at properties. And when the right one comes up, you'll be ready to go. And you're ready to go, maybe without having to deal with multiple offers, maybe being able to negotiate closing costs, inspections, repairs. So the next 6 months, I think, is a great time to be a buyer. And again, I'm not, I don't have a crystal ball, but the prices are only going to reflect a downward trend for a short window of time, because this spring was like no market we've ever experienced. And once you get past that, you're going to see that steady growth again. It's just we have to get past those comparison windows. So that's just kind of my opinion of what's ahead of us. So,
Good
All
job,
right.
man. Good job.
well, go sell a house this weekend.
Thank you.
So we'll do this. And again, these are the transition months. So every month when we look at the numbers, there's going to be something new on here that we see. And the big numbers this month is, look at the sales, 21% lower. So, the media grabs something like this, and I think the media is going to grab the price thing in January. So let's just keep an eye on this, and we'll follow it every month. So, all right.
Thank you, sir.
Have a great weekend.
You too.
You too. Thank you.